So my name is Paul Angerman. Look, today I'd like to talk to you about how I think you can protect and indeed grow your wealth through buying and storing gold bullion in Australia. I do want to state quite clearly that I'm not giving financial advice. Indeed, I hold a Master's in Engineering, not in Economics, but I think that probably gives me a little freedom from the indoctrinated training to look at what's going on in the world a little pragmatically. So what are we going to talk about? Firstly, we'll go through the reasons I think buying gold and silver bullion is worth considering. We'll talk briefly about physical metal as opposed to paper, and then talk about purchasing and storing it in Australia. So firstly, in terms of the reasons, the most popular clearly is as a hedge against the global economic uncertainty. And if we have a look at what's so uncertain about our global economy, clearly what ranks first mention is the incredible amount of debt that our governments are racking up. And whilst the US $17 trillion gets a lot of headline, it doesn't actually include about $100 trillion of unfunded liabilities that you and I would have to put on our balance sheets. Japan, the third largest economy in the world, has one of the highest debt to GDP ratios in the world and growing. And the somewhat aptly named pigs of the Eurozone, two very high debt to GDP ratios in what are very sick economies. And if we look at the next graph, when you look at how gold price tracks even just that US debt, there's a remarkable correlation. I think the second key contributor is clearly the astronomical rate in which these economies are printing money. And that printing, of course, debases these currencies and risks hyperinflation. The US gives it the disarming name of quantitative easing, but they're doing it at $85 billion a month. Japan at $75 billion a month. And then when you've got major economies that aren't actually printing the money, they're giving real forward guidance on near zero interest rates. So whilst the US talks about tapering of quantitative easing, the fact is it's not working like it was, and the globe is clearly hooked on it. Another key danger lurking is all the derivatives in the market since the GFC. There's a wide range of estimates, but if one quadrillion seems to get a fair Guernsey. And the danger there is with even just that talking of the QE, we're seeing quite a remarkable rise in bond yields, and that could be just one trigger that brings that down. So with all this newly created debt notes and printed currencies, it's worth considering the world has seen currencies come and go and crash time and time again, but gold and silver have preserved wealth throughout time, and it was interesting. I can't remember if it was Scott or Michael that mentioned this morning the three generations of Chinese with the preserving that wealth. Well, gold and silver has been around for thousands of years. And if you look at this next graph, there's just another example of that direct correlation of just monetization. In this case, the US and the gold price. It's quite a remarkable correlation. So I think the second thing that's happening right now is who is owning the gold and silver. We saw in the first half of this year fairly major price corrections in the market, and what that did is flush out a lot of the speculative players, and we often talk about weak hands or the speculators and the strong hands that own the physical metal and understand the fundamentals. And we saw a large outflow from those weaker hands. We also saw these high-frequency trading bullion banks who were massively short in futures at the beginning of the year, and then arguably orchestrated the very same crash that saw them able to cover their positions, and now are actually in almost a market cornering long position in gold with the greatest concentration of long position in COMEX history. Another characteristic of these strong hands is that they like the real deal. They like possessing the real precious metal. They're not attracted by the quick in and out trade of paper through ETFs or futures. And if we look at where all that gold and silver went in all the selling of the first half of this year, it quite demonstrably went to physical purchases, but very clearly to the east, predominantly China and India. We also saw East and central banks being very big purchasers of gold and silver. And if you just look at China alone, I think the last officially reported holdings in reserves was 1,054 tonne, which is only 2% of their reserves. Consider that against the United States, who hold reportedly 76%. Now, if you look at in 2012, China produced and imported 900 tonne of gold, and in 2013 it's trending way above that already. Now, I always get a laugh out of this next slide, which I think puts in fairly simple terms what we're seeing as a wealth transfer from the west to the east. Now, as I said, I'm a simple engineer. I understand supply and demand, and if you look at the third argument, in that sense, we are simply not producing enough gold and silver, and Barry touched on this earlier. I've talked about the real demand for it, but in terms of silver, there's a few additional strong factors. Now, we've got the investment side of things with silver, and there's a few factors there. We've got a gold to silver ratio at currently 58:1, which is at quite historically very high levels. We've got India, who has traditionally been the largest consumer of gold in the world, now aggressively buying silver. And we've got the US Mint reporting this year all-time record sales of silver eagles. But that's only part of the equation with silver. Silver wears two hats. It's not just a precious metal, it has its industrial use as well. And that industrial use is in key growth areas of solar panels, of medical, of electronics, just to name a few. So silver in particular seems set for greater demand. Now, I include this graph just to really depict the magnitude of the increase in the production and imports of gold into China. The fourth reason, and I think we've heard a bit today about diversification. I think someone mentioned earlier asset allocation. And really, diversification in any portfolio is critical. And now, I'm not saying for a minute to dump all your shares in your property and buy gold and silver. I'm talking about a balanced portfolio. I also suggest, in my humble engineer's opinion, that you can't deny the state of the global economy. And so to having some of a hedge in your portfolio to protect yourself against that, to me, just makes common sense. The other thing about gold and silver is they tend to be counter-cyclical. So when other assets or investment assets are not performing well, gold and silver tend to perform well. It also gets some of your wealth out of paper investment and into a hard asset. Now, that's not just gold and silver. That could be good quality agricultural land, which you've heard a bit about today too. And it also allows geographical diversification because you can hold gold and silver anywhere in the world. So if we look at how it compared against the other investments in Australia over the last 10 years, and I have to warn you, don't look at the numbers because I've updated these with gold and silver rebounding a bit in the last few weeks. That top line is silver. It's returned 275% in the last 10 years. Gold, 191%. The next is house prices, and I've used Brisbane house prices, being a Brisbane boy, at 144%, including yield. And then shares came in at 139%, including dividend reinvestment. And I want to stress those last two because some of the detractors of gold and silver say it's a non-yielding investment. That's correct, but it didn't really matter over the last 10 years. It's money. It's not about yield. Now, I also want to very briefly talk about paper versus physical bullion. Now, I've touched on the manipulation in the markets in paper, and likewise we saw a real disconnect, especially around April, May, between the paper price, which is where the spot price that you see on the news every night is set, and also and the physical, what you had to pay to get the physical metal in that period where there was a massive decline in price, but there was a massive demand for physical bullion. People saw it as a buying opportunity at a not real price. Now, ETFs are another vehicle that some people use to invest in gold and silver. Look, these are largely rumoured to, shall we say, not hold the full allocation of metal that the share reflects. And there's been very recent examples of people asking for their metal and being told, no, you can have the cash, which I think is fairly telling. So look, at the end of the day, the simple fact is, paper is only ever a promise to pay. There's the old saying that if you don't hold it, you don't own it. What I'd like to walk you through now is just how simple it is to hold it and beg the question, why would you do anything but? So if we look at purchasing bullion in Australia, Australia is actually one of the largest producers of gold and silver in the world. We have a strong and globally competitive bullion supply. And if you're lucky enough to be able to buy in Australian dollars, although I think Barry this morning was begging to differ, most of the commentary is about a falling Australian dollar. You have the opportunity to leverage your investment through that fall of the Australian dollar. And you have the opportunity to buy off us. Here comes the plug. Ainsley Bullion, we're one of the oldest and largest bullion dealers in Australia. We make it easy. You can buy by phone, over the internet, or by visiting us in our store in Brisbane. We can supply the full range of Perth Mint Chinese Lunar Year coins at the same price. And importantly too, we offer free insured delivery to the Reserve Vault in Brisbane. So I just want to talk about storage. I did talk about earlier the diversification, both not just in terms of product mix, but in terms of geographical mix. Now, Australia is a widely regarded geopolitically safe environment. And what I think is another key diversification strategy is to get out of the influence of government and financial institutions. Now, I'm not putting another bank slant on today, but this is about balancing risk. There's plenty of good things to do within a bank, but having some of your wealth out of the system, so to speak, is not a good thing. And I think we only need to look back at Cyprus to see a very recent example of exactly what can happen. And the fact is that since Cyprus, there are governments all around the world legislating exactly that type of bail-in approach. Our nearest neighbour is New Zealand, has done the same. So your storage should be independent of both government and financial institution influence. Then the Reserve Vault in Brisbane is exactly that. It's independently owned, it's the largest in Australia, and it specialises in bullion storage. And it caters to both private or custodial arrangements, and it's fully insured by Lloyd's of London. So just in summary, I think there can be no denying the precarious nature of the global economy. Real gold and silver bullion is real money, or always has been, and you should consider diversifying your wealth, not just by investment type, but by location and getting out of the system. Now, buying and storing bullion in Australia through Ainsley Bullion and Reserve Vault is very easy, and it does exactly that. Thank you. And please note my disclaimer as well.